Ever wonder how the world of investment works? Well, let's start by unfolding this monetary mystery. Investment is the process of laying out money now to receive more money in the future. It's the golden goose of personal finance, the key to building wealth, and a crucial aspect of our economy. Now let's break down a few terms. Stocks are a type of investment that gives you partial ownership in a company. Bonds, on the other hand, are like IOUs. When you buy a bond, you're lending money to an entity like a corporation or government. Then we have dividends, which are a portion of a company's earnings paid out to stockholders. And finally, ROI, or return on investment, is a measure of the profit or loss made on an investment relative to the amount of money invested. So, there you have it, the world of investment decoded. With the right knowledge, investing can be your ticket to financial freedom. So how exactly does one invest in a company? That's a question that stumps many. Well, let's break it down. Investing in a company essentially involves buying shares or stocks. You may think of shares as tiny little pieces of a company's pie. When you buy a share, you're essentially buying a piece of that company, a slice of that pie. Now, there are two main types of shares, common and preferred. Common shares are just that, common. They're what most people think of when they talk about stocks. They grant you the right to vote at shareholders' meetings and receive dividends, which are essentially a portion of the company's profits distributed to shareholders. Preferred shares, on the other hand, are a bit more, preferred. They come with a fixed dividend, which means you'll receive a certain amount of money regularly, regardless of how the company is performing. However, preferred shareholders usually don't have voting rights. So how do these shares generate returns? There are two main ways. First, through dividends, as we just discussed. When a company is doing well and making profits, it may choose to distribute a portion of those profits to its shareholders. The second way is through capital appreciation. This is when the price of the stock increases. Say you bought a share for $10 and a year later it's worth $15. That $5 increase is capital appreciation. Remember though that the stock market can be unpredictable. The price of a stock can go up, but it can also go down, so there's always a level of risk involved. Investing in a company isn't just about buying stocks and waiting for profits to roll in. It's about believing in the company's mission, its products, and its leadership. It's about understanding the market and making informed decisions. And ultimately, it's about patience. Rome wasn't built in a day, and neither is a successful investment portfolio. Investing in a company means buying a piece of its future success. So, are you ready to take a bite of that pie? One company that has caught the attention of investors is Caterpillar Inc. This Fortune 100 company, hailing from the heartland of America, is a global force in the construction and mining equipment industry. Recognized by the trademark yellow and black products, Caterpillar Inc. has built a reputation for quality and reliability that spans almost a century. Their business model is as robust as their machines, encompassing construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and more. Caterpillar's strong presence in these sectors is backed by a vast network of dealers, making their products and services available in every corner of the globe. This global footprint, combined with a commitment to innovation and sustainability, has positioned Caterpillar Inc. at the forefront of their industry, consistently outperforming their competition. It's a company that has weathered economic downturns and emerged stronger, demonstrating resilience and adaptability. Caterpillar Inc. has a strong presence in the construction and mining equipment sector, making it an interesting choice for investors. But before you invest, it's crucial to check the financial health of the company. Diving into the financial health of Caterpillar Inc., let's start with revenue. In the last fiscal year, Caterpillar reported revenues in the ballpark of $50 billion. Now that's a lot of machinery sold. This figure is an increase from the previous year, showing a promising trend of growth. Next up is net income. Net income, or the bottom line, is what the company has left after all expenses are deducted from revenue. For Caterpillar, their net income last year was around $6 billion. This indicates that the company is not just raking in revenue, but also managing its expenses effectively. But what about debt? Debt isn't necessarily a bad thing. It can be used to fuel growth and expansion. However, too much debt can be dangerous. Caterpillar's total debt stands at around $36 billion. While this might seem high, it's important to consider the debt-to-equity ratio, which is roughly 1.5. This ratio is within the acceptable range, suggesting that Caterpillar is managing its debt wisely. Now let's talk about cash flow. Cash flow is the money that is moving in and out of a company. Positive cash flow indicates that a company's liquid assets are increasing, enabling it to settle debts, reinvest in its business, and more. Caterpillar's operating cash flow was approximately $7 billion last year. This positive cash flow shows that Caterpillar is generating enough cash to keep the business running smoothly. And there you have it. Caterpillar's revenue is growing, their net income is solid, their debt is managed well, and they have a healthy cash flow. These are all signs of a financially healthy company. But remember, investing is not just about numbers. It's also about understanding the business, its competitive position, and future prospects. So while these financials are strong indicators, they are just part of the story. A financially healthy company is more likely to provide good returns to its investors. Like any investment, there are pros and cons to investing in Caterpillar Inc. Let's kick things off with the benefits. Caterpillar Inc., a Fortune 100 company, enjoys a dominant market position in the construction and mining equipment industry. The brand is synonymous with quality and reliability, which has led to strong customer loyalty and a high barrier to entry for potential competitors. Additionally, Caterpillar's extensive dealer network spanning across the globe provides a competitive edge that is hard for others to replicate. Looking at growth prospects, Caterpillar is focused on expanding its digital capabilities, which could unlock new revenue streams. The company is investing in technologies like automation, robotics, and data analytics to drive efficiency and improve customer service. Plus, Caterpillar's performance is closely tied to the global economy. So, as economies around the world recover from the pandemic and infrastructure spending increases, Caterpillar is well positioned to benefit. Now, let's shift gears and talk about the risks. The cyclical nature of Caterpillar's business is a double-edged sword. While the company stands to gain from economic growth, it's also vulnerable to economic downturns. For instance, a slowdown in the construction or mining sectors could negatively impact Caterpillar's revenues. Furthermore, Caterpillar operates in a highly regulated industry. Changes in regulations related to emissions, safety, or trade could potentially disrupt the company's operations. Also, Caterpillar's global footprint exposes it to geopolitical risks and currency fluctuations. Lastly, Caterpillar's push into digital technologies, while promising, is not without challenges. The company will need to navigate issues related to data security, privacy, and the integration of new technologies into its existing operations. In conclusion, investing in Caterpillar Inc. comes with its fair share of opportunities and challenges. The company's strong market position and growth prospects are certainly appealing, but potential investors must also consider the risks associated with cyclical industries, regulatory changes, and technological disruptions. A smart investor always weighs the pros and cons before making an investment decision. So, is Caterpillar Inc. a good investment? This is the question we've been tackling, and while we've explored various aspects, the answer is not a simple yes or no. It's a matter of perspective and depends on your financial goals, risk tolerance, and investment horizon. Let's revisit the key points we've discussed. Caterpillar Inc., a global leader in construction and mining equipment, has a solid reputation and a long-standing history of resilience. This is a firm that has weathered many economic storms and has consistently demonstrated its ability to bounce back. Remember, resilience is a valuable trait in any investment. We've also examined Caterpillar's financial health, which portrays a robust picture. With a strong balance sheet, consistent revenue growth, and a good dividend history, Caterpillar presents a compelling case. But remember, past performance is not always indicative of future results, so it's essential to keep an eye on market trends and the company's performance indicators. Investing in Caterpillar comes with its share of pros and cons, as is the case with any investment. On the upside, Caterpillar's diverse product portfolio, global presence, and commitment to innovation are promising. On the downside, the company operates in cyclical industries, and external factors like geopolitical tensions or economic downturns could impact its performance. So what's the verdict? Well, that's up to you. The decision to invest in Caterpillar Inc. should be based on an in-depth understanding of the company, its industry, and its prospects. Thorough research is crucial before you make any investment. One final thought before we wrap up. Investing isn't just about potential returns. It's about diversification, risk management, and aligning your investments with your financial goals. Whether you're a seasoned investor or a novice, it's essential to approach investing with a clear strategy and a keen eye for detail. Remember, investing is about making informed decisions, so do your homework and happy investing.